Stocks closed little changed on Friday, December the 2nd, after the November jobs report came in hotter than expected. For the week, the Nasdaq gained 2.8%, the S&P 2.7, the Dow 2, the NYSE 3, and the Russell 2.3%. It was another week of choppy sideways movement, and the market remains in correction. We look at how we've done. We've made 141.7% year to date. Last month we gained 14.7%. So we're handily beating our benchmarks. We're 156 points better than the S&P and 168 points better than the Nasdaq. If you're interested in signing up, just put that in your browser and sign up and subscribe. It only costs $20 a month. Okay, we're looking at a 2-year chart of the Nasdaq Composite Index, and you can see it remains in correction territory. We've got a fib retracement grid on here, and you can see that we're still below the 23.6 retracement level for the Nasdaq. So we're definitely in trouble, and this solid red line is the 20-week. We're even living below that. If we take a look at the S&P 500, that's SPX. Now we're doing a little bit better, but we're above 38.2% retracement, and we're riding above a little bit the 20-week moving average there. But I think we got to get above 4,300 up here before I would say we're back in uptrend mode. Okay, about half the ETFs that we follow are trading similar to, are basically, they've moved above their 200-day and their 50-day moving averages. And we have 4 open positions that fall into that category. So let's take a look at those charts. The first one is XLI. And I'm going to look at that. That's a 2-year chart, but I'm going to look at it on a 1-year daily chart. And you can see that we're comfortably above the red line, which is the 200-day, and the blue line, which is the 50-day. Got a standard size position in that one. We're up a little bit on the industrial sector. XLB is the next one I want to look at, and I believe that is materials. Yeah, not quite as strong as industrials, but still comfortably above the 200-day. Then we've got ITA, Aerospace and Defense, and that one has made a new 52-week high. So that's a nice move here. So we were in it here and made some money on this move up, got stopped out, got back in, and got a nice position in that one. And the last but not least is IO Silver. IO Silver and away. Just broke out above its 200-day moving average here, and we picked it up at $20.25, and we got a nice gain on that one. We're up like $1,600 on that position. Now there's others out there. 2 of the stronger ones are Energy, which we just got stopped out of on this pullback here. That's the Energy Select sector, and the other one is Healthcare. I wanted to take a look at. And again, we had a little bit of a tight stop on that one on Friday, but so anyway, that's how it looks on our portfolio. Before we go here, I do want to take a look at the Qs so we can see it again. This just this sideways, choppy market environment that we're in. And then the SPY, same way, except a little bit better because it's been living above its 50-day, the blue line, and it just crossed over the 200-day line. And we would be willing to get in it at 410 bucks on that one. So might be taking a position in that one next week here if the market keeps moving up. Okay, last but not least, let's take a look at the heat map. All right, this is a 1 week view of the S&P 500 and the tech stocks or the FANG stocks, if you call them that. They benefited from the Fed Powell signal of a slower pace of interest rate hikes. Meta here was up pretty big. That's 10.8% gain there. Netflix was up 12.2%. Tesla up 6.56%. Google 3%, Microsoft 3%. Apple didn't participate really because they announced that they may be moving production out of China because of all the problems there are in China. So that's all for this week's video. My name's Greg Gallagher. Good luck and good trading.